Futures trading involves a substantial risk of loss and may not be suitable for all investors. Therefore, carefully consider whether such trading is suitable for you in light of your financial condition.
Good morning. It's Friday, February 27th. I'm Phil Streible, Chief Market Strategist at Blue Line Futures. So let's get you set up here for the trading day ahead. Looking at gold and oil, they do remain elevated after the U.S. and Iran agreed to those further nuclear talks, with American military buildup in the Middle East here keeping the markets on edge about any kind of potential conflict. You do have gold up about 20% this year, finding its footing above that 5,000 mark here after that abrupt pullback on January 30th. Looking at copper, extending this week's gains as investors chase the metals rally here after China called for more policies to boost domestic consumption. So you look at April gold futures here, the high overnight 52.17, the low overnight is 51.82, a tighter range here in the trading, and it's forming this bullish pennant pattern here above that 51.22 key level support. The 10-day average true range is falling down to $157, and gold volatility is also pulling back, but just above the elevated levels 33. 32 is one of the key levels to watch here. When you get that market below that, it seems to really smooth out some of the volatility and some of the price action. You look at May silver, the highs overnight, 91.16, sitting last year up about $2.63, up 3% on the session here. You've got the other metals here. You got platinum and also palladium both higher as well, along with copper up about 2%, sitting at 611. So you can see those highs overnight, 91.16. That's really a key level here. You run into some pocket resistance around February 4th and 5th, where you get that number to watch here as 92.93, where a breakout above that on a closing basis could bring in some of those trend followers here and the momentum traders on a potential run back up to $100. The 10-day average to range sits at $7.23, and gold silver volatility just pulling back a bit here to 84.5. You look at the ETF flows, well, they're buying gold, they're buying platinum, they're selling silver and selling palladium here. So the gold ETF flows, it was a third straight day of growth here, rising just about 34,000 troy ounces here, and total gold held by ETFs up 1.9% this year. It's the highest level since August 9th of 2022. So gold again up 20% this year, tacking on about 0.4% in the last trading session. You look at the silver ETF flows, well, they're gaining momentum as well. They do have a small pullback overnight here, cutting about 439,000 troy ounces of silver. However, on the week here, we've had a couple big boosts where we saw Wednesday a 10 million ounce buy, Thursday, a 7 million ounce buy, so quite a bit of momentum back to the upside. Now you got the gold silver ratio sitting at 57.5. You look at stock futures, they are looking to set to extend those losses on Thursday with some momentum and some uncertainty after a volatile month. And really, it's the key to how is this AI going to play out here, and how is all this CapEx spending delivering? Because you look at the earnings season, which wraps up next week here, we've seen the S&P 500, the fewest companies beat estimates since 2022. Of the 481 have reported so far, about 73.5% have beaten estimates, while 22% have missed. We will have some economic data and some key economic data with producer price index coming out here. That's a really big gauge here, and it kind of sets the stage for that PCE and a lot of the inflation data. And then you'll have construction spending as well. If you do look at the interest rate cut expectations, they are rising here as the 10-year note falls below 4%. So you get that March 18th meeting, they're looking at about a 4% chance that they cut rates, but you go out to April, that's starting to push up to 22%. June is going to be 51%, and September is fully priced in. You'll get the dollar index, it's slightly lower. The euro currency is slightly higher here, and crude oil futures up about 2.3%. So it's a lot of uncertainty as far as what the U.S. is going to do. They're moving a lot of those assets over to the Middle East here. Will they deploy them is the big question. So we sit at 66.76, up at about $1.50. That's 2.3% on crude oil. They really want Iran to surrender what enriched uranium they have. And then they've also, the U.S. has identified 3 different sites here where there's some potential nuclear activities taking place. So those would be some of the strike zones to keep an eye on here. And then also keep an eye on the Straits of Hormuz. Last go around, market shot up to 80. They can't shut down the Straits of Hormuz, so prices had pulled back. This go around, they've done some military operations which have included shutting down the Straits of Hormuz. That's why we're seeing crude oil prices remain a bit elevated. You do have the VIX over that 20 mark, the S&P 500 down 35. You got Bitcoin futures unable to hold that big gain. We had that big $7,000 push to the upside here, and since then prices have been just steadily pulling back to the downside. And then you look at S&P gamma exposure, it's just slightly negative here. 6950 is going to be a key level of resistance, 7,000 above that. 6850 is your support, 6,800 below that is the next support level. So you look at European trading, well, European stocks are on track for their 8th consecutive monthly gain, longest winning streak since 2013, and most Asian markets rose, with the MSCI Asia Pacific Index recouping its earlier losses and closing near a record high. You look at South Korea's Kospi, this thing is on fire. It's edging 20% higher on the month here, reaching a record high. So quite a bit of robust growth there. So if you guys got any questions, reach out to us here at the Commodity Classic. Stop by the Blue Line Futures, Blue Line Capital booth here. Say hi to Bill, say hi to Oliver. The other guys are there, Matt, Ezra, and Ryan. They're all there here. So I'm a bit jealous because I'm stuck here in the office trying to keep the machine moving over here. So you guys got any questions, shoot an email, info@bluelinefutures.com. I'll probably write an article on Kitco here today covering that 100-ounce silver contract, maybe looking at a couple other ideas here in the options market as some of this volatility is compressed. So you're going to get the option premiums trading just a little bit more normalized, because when you go $10, $20 out and those options are trading at like $20,000 to $30,000, becomes quite difficult. And a lot of people were questioning like the bid offers and prices updating and things like that. The reality is that those options, once they get to like $20,000, $30,000, $50,000 for a single strike on an option in the silver market, you have less participants that are going to be able to navigate that particular strike, and those strikes are most likely bundled into spreads, which are less frequently traded here. So the market makers, they're there, but there's just not the trading activity to support tight bid offers. But now we're starting to see some of that volatility come in on the markets, so we should be able to look at some different spreads here in the silver market as well. So you guys got any questions, shoot an email, info@bluelinefutures.com. Remember, futures and option trading does involve risk of loss, may not be suitable to all investors. Good luck, good trading, have a great weekend.
Futures trading involves a substantial risk of loss and may not be suitable for all investors. Therefore, carefully consider whether such trading is suitable for you in light of your financial condition.